Question 61. A firm has 10,000 shares of common stock outstanding. Which of the following options will result in the highest number of total shares outstanding? A 2-for-1 stock split, a 5-for-4 stock split, or a 60% stock dividend? So in the case of a 60% stock dividend, what this is telling us is shareholders are going to receive additional shares equal to 60% of their current holdings. So basically the company is paying out a dividend, but in the form of shares. So 60% of 10,000, if I hold 1,000 shares, I would receive an additional 600 shares as a dividend. So we can do the math here to figure out which of these is going to be highest. So in a 2-for-1 stock split, we are multiplying the number of shares by 2, since we're going to be basically taking this 10,000 and making it into 20,000. And then 5-for-1, we'll do 5 divided by 4 and multiply that by 10,000, gives us 12,500. And then the 60% stock dividend, we can do 1 plus 0.6 multiplied by 10,000 gives us 16,000. So we can see highest number of shares outstanding from here is going to be the 2-for-1 stock split, 20,000. Answer A. Question 62. Emily, a seasoned financial analyst, has been analyzing the financial statements of Retail Corp., a company known for its expansive chain of retail stores. For years, Retail Corp's financial performance has been stable, prompting Emily to predict similar stability in the future. However, recent market trends indicate a significant shift toward online shopping, a domain where Retail Corp has limited presence. Despite these trends and reports forecasting a decline in traditional retail, Emily continues to project stability in Retail Corp's financial performance, basing her forecasts on the company's historical financial stability and her extensive experience in analyzing similar companies. Which of the following biases is Emily most likely exhibiting in her analysis? So we've got A, conservatism bias. Conservatism bias is when we're kind of slow to update our forecast and incorporate new information into that forecast. So this sounds like it could be right up that alley. She's predicting similar stability in the future based on past performance, even though these recent market trends and the lack of online presence are kind of signaling that they may not have that same stability going forward. So I think A sounds like a pretty good answer so far. Let's see if we can rule out B and C. B, illusion of control bias. So in the illusion of control bias, that would be indicating that Emily somehow thinks that she has control over this situation and can kind of influence how Retail Corp runs their business to do so. And there's really no indication of this. Emily's not in contact with management or has any kind of inside information, so to speak. So I think we can rule out illusion of control. And then C, representativeness bias. This one is tricky because generally this involves us thinking that the future is going to be like the past, which is kind of what we're predicting here. We're predicting similar stability based on the previous stable performance. However, I think the key difference here, if that was the only information we have, then I think we would go with representativeness. But the key information here that we're given is recent market trends indicate significant shift. We're not incorporating that new information into our forecast. And so this would fall best under conservatism bias. Answer A. Question 63. Which of the following is most likely included in the financial notes and supplementary schedules? So we've got these 4 statements or items here, 1, 2, 3, 4, and then we need to determine which of these will be included. So 2 and 4, 2, 3, and 4, or 1, 2, 3, and 4. So under supplementary and financial notes, are 1, subsequent events, i.e. events that occur after the balance sheet date, included here? Yes, they are. 2, related party transactions. Yes, they're also going to be included. 3, operating segments performance. Correct, that will also be included. And 4, business acquisitions and disposals. Yes, that'll be included. The financial notes and supplementary schedules are going to have, kind of as mentioned here, supplementary information. So they'll have more details outside of just the basic information given on the balance sheet and income statement. So things that may not be reported every single quarter and are maybe require some more detail or context to kind of explain. So those are some things that'll fall under these two sections, and these 4 items would kind of fall under that category. So we're going to go with answer C. All of these would be included. Question 64. Jason Gilbert, CFA, is an exam grader for the CFA program. He also works as an independent research analyst. When asked about his experience as a grader and the CFA program's scope in the financial market, Gilbert makes the following comments. Comment 1. Although results for the CFA exam are yet to be released, pass rates will be the lowest across all levels. This sounds like a red flag. He's working as a grader, and we haven't had results released yet, but he obviously has some inside information on the pass rates. So this seems like he's revealing some information that probably shouldn't be revealed, and so that seems like a red flag off the bat. Comment 2, the CFA program equips candidates to be qualified enough to deal with a broad range of real-life topics, including but not limited to financial analysis, portfolio management, quantitative techniques, and corporate finance. I don't see anything wrong with that comment. That's kind of the purpose of the CFA program, to give you a broad range of knowledge on all these different topics. Which comment most likely represents a violation of the CFA Institute Standards of Professional Conduct? Comment 1, comment 2, or both of the comments. So I think going back to notes we made as we were going through the question, comment 1 sounds like it could definitely be a violation. We're providing information that is not yet public yet, that the CFA program might not want us to mention. And comment 2 seems fine. It's a pretty broad comment, and not really kind of aligns with what the purpose of the program is, like we said. So I think we can rule out B and C as comment 2 being a violation, or both being violations, and go with A, comment 1 only is a violation. Question 65. Concerning referral fees, which of the following statements is most likely accurate? A member is required to disclose only the fees he receives. A member is required to disclose only the fees that he pays. So only difference here is receives and pays. And then a member is required to disclose both fees received as well as paid. So for the best answer here, we're going to go with C. Whether we're receiving or paying out a referral fee, both of these could lead to some type of conflict of interest, and so we should disclose both of these. Answer C. Question 66. Sandra Filner works for a firm that's been actively managing investments since 2009. She serves on a team whose charge is to prepare GIPS-compliant presentations for 2016. In researching which investment accounts to include in her firm's calculation, she chooses the best performing index funds for the previous 7 years. Does Filner's decision most likely lead to GIPS compliance for her firm's upcoming presentation? So we've got no, or yes. I think we can rule out the yes right away. Is this GIPS compliant? If we're only choosing the best performing index funds or best performing investment accounts that we manage, that is strongly defeating the purpose of being GIPS compliant and being transparent. We have to include all of our investment accounts that qualify, so that we are not misleading investors. Because if we're only showing them the best stuff, that is certainly misleading if we have other investments that we're managing and that we're doing poorly. Okay, so we've ruled out the yes, so we know it's a violation. So why is this a violation, or why does it not lead to GIPS compliance? So A, no, Filner chose only the best performing index funds to include in her firm's calculation. It sounds like it's probably our answer for what we were saying earlier. If we're only including the best performing stuff, that's misleading clients into only showing that we have these funds that did well, not showing the stuff that's done bad. B, no filner must include at least 10 years worth of composite results in order to be GIPS compliant. We can rule that out. You don't have to show 10 years worth if the firm is not old enough to show that. So that's not a big deal. Stick with answer A here. Question 67. To ensure compliance with this standard, members must understand each client's unique needs. Investment professionals should seek to communicate recommendations to all clients who have indicated an interest in those for whom the securities fit. The standard does not prohibit a firm from offering various service levels. This passage from the CFA Code and Standards most likely relates to which of the following? A, Standard 3C suitability. This sounds like it'll be our answer right off the bat. Key here is must understand each client's unique needs. By understanding the client's unique needs, you can understand whether an investment is suitable for that client. So A sounds like it'll be our answer right off the bat. Let's make sure we can rule out B and C. For B, we've got standard 4C, responsibility of supervisors. This is primarily talking about clients, making recommendations to clients, understanding clients, not really mentioning supervisor duties. So I think we can rule out that answer. And then for C, standard 5A, diligence and reasonable basis. Again, this is more client focused, whereas diligence and reasonable basis is going to be focused on doing due diligence of certain investments and making sure that we are properly diligencing those before putting them into client portfolios. So we go with answer A here, standard on suitability. Question 68. Nelson Wan, CFA, is a tax advisor at a financial services firm. His recent article on effectively implementing tax minimization strategies for client portfolios with high tax brackets has increased his popularity in the industry. Wan is offered an opportunity to deliver a lecture on tax minimization strategies to employees of an investment management firm in New Zealand. The firm offers to pay for his travel expenses and hotel accommodation. Wan accepts the offer, informs his employer, and travels to New Zealand with his fully paid trip. After the lecture, the senior investment manager invites Wan to a golf game at an exclusive club. He accepts the offer and informs his supervisor of the invitation upon his return. According to the Standards of Practice Handbook, Wan is most likely A, in violation. He should have paid for the New Zealand trip out of his own pocket. We can go ahead and rule this out. He went ahead and informed his employer right away. And, this is not out of the ordinary for a firm to pay for travel expenses and hotel accommodation if they're paying you and wanting you to come talk to their employees. In there, between a financial services firm and an investment management firm, the conflicts of interest here are probably not too great. They're almost more so competitors with one another. And so they're paying somebody to come speak on a topic. So I don't think there's any issues here with the travel to New Zealand. B, in violation. He did not seek written permission prior to accepting the golf game offer. And then C, in compliance, details of the golf game were not available to him before departing for New Zealand. I think we would lean towards C as the correct answer here. The golf game is it's at an exclusive club, but this probably isn't something huge that would that would lead to him compromising his independence and objectivity. Certainly paying for the travel expenses and hotel was probably a much bigger expense than the golf game. And it wasn't known ahead of time, and we informed the supervisor upon return. So I don't think there's any issues there, and I think the best answer would be to go with C. Question 69. According to the CFA Institute Standards of Professional Conduct concerning disclosure of conflicts, potential conflict situations that could prohibit a member or candidate from fulfilling their duties to the employer should most appropriately be dealt with by A, documenting the conflict. Sounds like a good first step. Basically acknowledging that there is a conflict between a member candidate and fulfilling the duties of their employee. B, reporting the conflict to the employer. I would say this goes a step further and is probably a better answer than A. So I think we could go ahead and rule out A. We'll probably be going with B at this point. And then C, disassociating from the situation. This is probably too big of a first step. If the conflict ends up being too big of a issue related to the employee's duties, then this might need to be the situation. But I think that the most appropriate first step here is probably going with B, reporting that conflict to the employer and getting them involved in the conversation, seeing what the best way to move forward is. Question 70. The CFA Institute Code of Ethics most appropriately requires members and candidates to A, encourage others to practice ethically and professionally to reflect credit on the profession. Sounds like a pretty good answer so far. We want this for our own sake and industry's sake so that we can have a credible profession and industry that's looked upon favorably. B, ensure the preservation of capital market integrity is given priority over protecting employer interests. There's not really a prioritization of these two things, capital market integrity, employer interests, so I think we could rule out B for that. And for that reason, stick with A as our best answer so far. And then C, use reasonable care and judgment to achieve and maintain independence and objectivity in their professional activities. This is tough. I think C could also seem correct since it's within the CFA standards. But A is a bit more broad, and I think these activities within C kind of fall under A, so I'm inclined to go with answer A here, since it's more broad and the question's pretty broad. So we'll go with answer A.